Hello there, fellow traders. So this video I'm going to share with you how to diversify your risk in your trading, right? So whatever you are in trading, you are in stocks trading, you are crypto trading, you are in forex trading, gold trading, so whatever it is, right? So today I'm going to share with you is about the forex trading, how to diversify using this EA Pips plus price action EA diversification strategy, how to minimize your risk, right? So I'm gonna share with you guys how to diversify and manage your lot size independently each currency pairs that you are going to use, right? So go with me in my screen. I will share with you how to do it, right? Okay guys, so here in my MT4, I'm gonna share with you. I will open up this particular EA Pips Plus Price Action EA, right? A lifetime copy, right? So as you can see here, guys, right? Based on my default settings, I have here point 0.1 and then my stop loss. So talking about risk, we're going to talk about here only the lot size versus your stop loss, right? So I'm going to share with you how to calculate this first, right? So as according to here, let's say I'm going to put lot size with point 0.1 and stop loss of 100, right? So my take profit will be 100, and then I'm using start and steps, right? Trailing stops, right? Trailing steps and trailing start, right? But we're not going to talk about take profit. We're going to talk about the risk, the stop loss versus your lot size, right? Okay, guys. So let's say you're going to use point 0.1 lot versus your 100 stop loss. Okay, how to calculate that, right? So I'm going to show you here. All right, I'll share with you. Let's say just now I'm using point 0.1 lot, right? Point 0.1 lot. That means in a 5-digit broker, right? Okay, in 5-digit broker, that is $1, 1 USD, right? Per pips, right? All right. So that is $1 USD per pip. Okay, how to know that you are on 5-digit broker, right? Okay, as you can see that over here, you can see that this is the portion here. This is 5-digit, right? So that means that sometimes your broker having 4 digits, right? But if you're using 5-digit, you are having this particular calculation here, right? Okay, so now, so that means that just now here, based on our settings here, right? You have 100 stop loss, 100 pip stop loss, and you're using point 0.1 lot, right? I'm gonna share with you that. Okay. All right. Click OK, and then go back here, right? So that means that $1, 1 USD, all right, multiply by 100 pips of your stop loss SL, right? That's equivalent to 100 USD, right? So you're going to lose 100 US dollar if you use one lot size, right? 0.1 lot size. So if your account is not enough to cover this, let's say you are using 1,000 1k capital US dollar, that is 10% of your 10% of your capital, right? That is too big risk, right? That is too big risk, right? If you are using 1k, right? So what if we will use diversification strategy, diversify your investment, diversify your lot size to different pairs, right? Okay, now you're using this one, $100. Why not we use diversify? Okay, so I go back here. What if we will use here with what if we will use with 0.01 lot, right? 0.01 lot, but we maintain the stop loss with this 100 pips stop loss, but we will reduce the lot size to 0.1, or we can change that to 0.2, right? Okay, we will use 0.2 or 0.5. It's up to you, right? But you can we will try with 0.1. All right, 0.1 lot size, right? 0.01 lot size, right? Okay, guys, let's say we will remove this, and then since that is 10% of your possible loss on your account, is too high, right? It's very high. So what if we will use diversification? So I will delete that all, and then we will change that to diversification. All right, so we will change that. Let's say we will start with 0.01 lot right here. All right, okay, 0.01 lot. All right, then every per pips, right? So again, in 5-digit broker, that is 0.1 per pips, right? 0.1 USD, right? 0.1 USD if you're using US dollar, okay, per pips, right? All right, so 0.1 USD multiply by 100 pips. Why 100 pips? Is because the better, the farther stop loss that you do, the better, because it's not easy to hit, right? All right, so that is 100 pips, right? Okay, that means that this 0.1 right here, 0.1 multiply by 100 is equivalent to, that is 100 pips here, is equivalent to 10, right? So try to calculate. Okay, we will use calculator here. That is 0.1 multiplied by 100. You have $10, right? So possible that you have $10 loss. All right, you have $10 loss USD from this particular trade, right? That is good enough, right? So let's say just now you will use 1K, right? So 1K capital, or your immediate capital, right? So that is about 1% only, right? That is 1% only if you lose 10 USD, right? So that is good enough. Why? It's very safe. It is just 10 US dollar in your 1,000 capital with 1% loss. So that is good enough. So what if, question is, are you going to win, right? Are you going to win, right? Okay, remember that every trade that EA does, this particular, if you try this AA here, or this particular price action EA, definitely you will be winning, right? So as you can see in my previous videos here, right, we have lots of videos that we share on how to win on the market, right, based on settings. It depends, right? So you can check these videos over here in our website. So that is how it works, right? So based on the particular trading, not all your trade will be losing, right? Some trades will having profit as well, and even more than that, right? So, and unfortunately, sometimes you must know, you must engage as well with losses. That is normal for trading, normal for all investments. There's definitely, there's a loss, there is a SL, but you can have diversification strategy, you can have advantage on with the market, right? So this is how is it, right? Okay, now first, what if, so now you understand on diversification strategy. Let's say, what if you will be losing just 1% of your capital, right? Based on your capital, you just lose about 1%. Then we will diversify that with different currency pairs, right? So what if, I will remove this already. All right, what if, let's say, every pair, right? Let's say this particular pair Euro USD. Okay, let's say number one Euro USD. Okay, you will be losing risk is just equivalent to 1% from your account, right? That's good enough. Okay, another thing is GDP USD. USD, you also have risk about 1%, right? And you will, one more thing, you're gonna trade with gold. USD is also 1%, right? So from your 1K capital, is equivalent, you only lose about 3%. It's about 3% means that is 30 USD, right? So is it good enough? That's it's really good, right? So that is 30 US dollar in your 1K capital. So that's the good thing. If you do diversification, every trade you only risk 1%, and your this is your risk. The rest will be earnings, right? Remember that you also have not all your trade is in loss. Most of it is in profit, right? If you try this particular EA here, definitely you will be amazed that there is sometimes loss, but the majority is winning because of we are using trailing profit and trailing stop, and just use particularly this particular presets here that we are inclusive that in your during your download. So if you try that, definitely there is an advantage, right? So that is how the risk management diversification put your risk in your lower, right? Put your risk every pair very low, right? Just 1% in every trade, but you can have diversification. Let's say you are the EA is trading for you automatically 24/5, 24 hours and 5 days with a time allocation. So it depends on you, but if you use the preset files, it's just already configured, right? So you use Euro US dollar. Let's say Euro US dollar risk, you are losing 1%, but GDP and gold is winning also 1%, so it's still gaining another 1%, right? Correct, not? That's good, right? So it is another 1%. So either one is being risked, but another two is having profitable, right? So that is how the risk management works. So sometimes gold is very aggressive and it always win more than that, right? Based on my experience on this particular EA, pips plus price action EA here. If you can see this, if you can see these particular videos, you can see that the winning trade is always there, right? So although there is a risk, but if you can manage that by diversification and money management, you are really win. So don't forget, don't take out the stop loss. Although this particular EA here, you can remove that to become a zero stop loss, but my advice is don't remove the stop loss. It could be better far stop loss but lower lot size, right? So that's a good thing. Don't forget to put the stop loss, because the stop loss is your partner in your trading. So because if you didn't put stop loss, one day your account will be gone. You will be margin call. So make sure that put stop loss and calculate nicely based on you have learned just now on how to calculate that your risk per trade that you have, right? So I hope you learned this particular video, particular strategy, diversification strategy using this EA pips plus price action EA. I hope you guys and subscribe this video, subscribe this channel. You learn more on trading, especially in Forex, right? So thanks a lot. Good luck in your trading.